Aloha. When to sell cash secured puts. When to sell cash secured puts. In this video, we are going to discuss when to sell cash secured put options. And we are going to do it with the who, the what, and the when. Let's start with the who. Who am I? My name is Brent. I moved to Hawaii in 2000. I took my first options trading course in 2007. I've been learning ever since. Why does this matter? Why is this relevant to the subject matter of when to sell cash secured puts? It matters because I'm on Hawaiian Standard Time. The stock market trades in Eastern Standard Time. And what I found for myself is I needed to use strategies that would allow me to be profitable without waking up at 3:30, 4:30 in the morning when the stock market opens on our time, and to be actively monitoring the market. And why do I need to sleep? Because I need my beauty sleep, ladies and gentlemen. That's the who. Let's find out the what. What is selling a cash secured put option? Basically, you are selling an insurance policy that you take the legal obligation to purchase a certain stock within a certain time frame if certain conditions arise. You're paid a premium up front for this. Now, we're talking about a stock, but you could sell a put option on anything as long as you got another person that's willing to do this with you. And most commonly, put options are used in the stock market, but you could do it on anything. So you're selling an insurance policy on some underlying asset, and it has a certain time frame that it's active for. And if certain conditions are met, you are going to cash out the original buyer, and you are going to take ownership of that asset, and you're going to be paid a premium to have your cash on the side waiting to do this for the person for that certain time frame if these conditions arise. You're going to keep this premium regardless of what happens. You buy the asset, you keep the premium. You don't buy the asset, you keep the premium. That, ladies and gentlemen, is the what. Now let's move on to what everybody came for. When. When should I sell cash secured put options? Well, let's go down the list. It's a long list right here. When you're new to trading. When you're new to trading, you should sell cash secured put options. When you're selling cash secured put options on a stock that you wouldn't mind owning the rest of your life if you had to, at a price that you wouldn't mind paying for it if you had to, you're in a pretty good situation. Because if you buy the stock, you wouldn't mind owning it the rest of your life anyways, and you're happy with the price that you paid, and you got to keep the premium. And if you don't buy the stock, you got to keep the premium. So either way, you win. So when you're new to trading, this is a great strategy to be doing. When you don't have much time to trade, I can imagine somebody who even lives in the Eastern Standard Time Zone, maybe they've got 2 kids and a full-time job. Well, when should they sell cash secured put options? Often. If you're very busy, the same thing applies. No matter what the outcome is, you buy a stock that you want to own at a price that you're happy to buy it at, you win, and you got to keep the premium. You don't buy the stock, you got to keep the premium, you win. When you live in a different time zone, like myself, you already know the reasons why, ladies and gentlemen. No matter what happens during the time that your put option contract is valid for, no matter what happens, you buy the stock, you don't buy the stock, you win. How about when you don't care that much? When you really just don't give a bleep, when you don't really care, sell a put option, cash secured put option. When you don't care that much about trading, you really don't care, sell a put option. When you want something better than a bank account, you can use your brokerage account like a bank account. One of my brokerage accounts, it is a bank and a brokerage, and I have a debit card with it, so I can hold a certain amount in cash that I could just use to make purchases, and other amount of that money in that brokerage account I can be actively doing whatever types of trades I want to do. So let's say you're not really happy with what the interest rate you're getting at the bank. This is a great strategy to do. Why is that? Because it doesn't matter what happens when you're selling cash secured put options on a stock that you want to own and purchasing it at a price you'd be happy to buy it at. When else should you sell put options? When you want to learn more. This is the learning strategy. This strategy, you will learn so much because it's a very slow strategy, and you're gonna end up watching it, but you don't necessarily need to watch it. And you keep doing this over and over. It's a very forgiving strategy, and you just start learning things. There's a lot of intangible things that you'll be learning. I have some ideas of what they'll be. However, I'm not going to give you the spoiler alert. I'm not that type of person. I'm going to allow you to have your own journey with it. So if you want to learn about trading, this is a great strategy to start with. When else should you sell cash secured put options? When you are risk adverse. When you're risk adverse, why should you sell cash secured put options? Well, let's think about it. If you're purchasing a stock that you wouldn't mind owning the rest of your life if you had to, the only thing that could potentially go wrong is if that stock went bankrupt, totally went to zero. The reason why that is the only thing that could really go wrong is that when you own a stock the rest of your life, when you've made good stock selection, and as you learn this strategy, there's ways to cash flow. Assuming you made good stock selection, so that includes the stock giving you a dividend, and then once you own the stock, there's something called selling a covered call. So between dividends and selling covered calls, you actually start lowering your cost basis of the stock. I don't want to go too much into the weeds about that in this video, but let's just say this. If you bought a stock for $1, in every year between dividends and covered call option premium, you generated, every year, you generated 25 cents. Then the first year, initially, when you first purchased that stock, your cost basis is $1. 12 months goes by. You've taken in 25 cents in your account, in your pocket, right? Now, 25 cents minus $1, 75 cents. You've reduced your cost basis for that stock by 75 cents. Now, if you continue to do this for another year, then you've reduced your cost basis to 50 cents. Third year, 25 cents. Fourth year, your cost basis is $0. You paid $1, you've taken $1 out. You want to get technical with tax and all this stuff, go for it. Sooner or later, when you're collecting dividends and you're collecting covered call option premium, sooner or later, your cost basis will be at $0. $0, people. This is how you can create an infinite return. So the only real hiccup with this would be if the company goes bankrupt. So you're risk adverse, you want to take a very hard to lose money strategy. This is it, ladies and gentlemen. If you don't think this is it, look at the results people are getting on their directional trades in the stock market year 2020 around April and May. How are they liking those? Are they sweating it a little bit? They might be sweating it. People doing this strategy, the stocks that I'm doing this strategy on, I don't care. Another reason why you might want to sell cash secured put options is when you want to acquire stock. When you want to acquire stock sort of around a price range, let's say you're willing to pay $50 for the stock. Well, if you're willing to pay $50, would you buy it at $48? Probably. Well, you can be selling a cash secured put option on that stock until you potentially get filled at 48. So you buy it at a little bit of a discount. If you were okay with buying it at 50, now you bought it at a $2 discount plus whatever amount of option premium that you've taken in. Now, some of the comment critics are going to say, well, Brent, but what if it's dropping, what if it dropped down to 40? Well, if you were going to buy it at 50, and instead of buying it at 50, you bought it at 48, and now it's dropped down to 40. Well, wouldn't you be worse off buying it at 50 without the premium? Yeah, you would. So either way, you're running into that problem. And we already went over how eventually you can reduce your cost basis to zero by selling option premium on the covered call side, which makes a whole lot more sense once you start learning from selling the put option. So that, ladies and gentlemen, are 8 reasons when you should sell cash secured puts. We're going to end this off with one person I love to learn about trading from, Andy Tanner from the Cash Flow Academy. And Andy says, when it comes to financial education, you can choose a policy of ignorance and hoping for the best, or a policy of education and actively seeking the best. That's a lot of words in there. So let's try to pick out the real key words. When it comes to financial education, you can choose ignorance or education. The choice is yours. And if you want to go with education, then consider getting yourself a free copy of the 3 underused tactics to transform your financial results right here at ihavesuccess.com. You guys have a fantastic time until we meet again.